Welcome to Trades in Rappel. I'm CEO and founder of TradeSpin. Today I'd like to go over current market conditions as we approach in the Fed decision and all the turmoil and liquidity issues we have in financial and markets and in debt market. Disclosures are very important. Please read them. If you're new to trading stock and options, I encourage you to visit the link on your screen, and you can always pause the screen if you need more time to read the disclosure, especially the first time. All right, so let's take a look at the market. I'm using our model, neural network model, main model that learns and trains on the data, makes predictions. So for the next 10 days, it sees overhead resistance at 396, support at 387 as we are heading into the Fed decision. I think the model actually sees still a downward pressure, so potentially reaching as low as 385, maybe 382 level after the Fed decision. So I think Fed decision, there's short-term volatility, market could potentially pull back and then resume its short-term upward move to the upside. I think the upside is limited also. I think downside is limited right at this point and upside is limited. I think we're just going to trade in the range as we approach an earnings season in April, towards the end of the April. If you zoom out into 6 months prediction, we were looking at the 10-day prediction. 6 months prediction also hasn't changed. Potentially we can reach 421. I think that's the best case scenario. More realistically, just revisit February highs around 410, maybe 412, right? That's probably, but somewhere between 410 and 420 is your overhead resistance. Somewhere between 375 and 387 December lows is your support for March and April. So all eyes are on Fed. We've been trading in the range around 380. That's your December lows, right? And the resistance is close to this downtrend. So somewhere between 405, 405, 407 is, I think, where the rally can continue. But again, I don't think we're going to break this upward resistance. All eyes are on the Fed tomorrow. Very important. Meanwhile, silver, gold, right? We have a new trade, recessionary trade. Before, silver and gold acted as a precious metal. Now it acts as a hedge against possible recession. So gold is at all-time high or approaching all-time high, knocking on the door of all-time highs. I think it's just a matter of time for gold to break to this level. So silver has been underperformed gold. I think it will converge. So I am trading around silver position. Short term, obviously overbought. I think I would be a buyer in pullbacks on silver, gold miners. So continue to trade around this position, still have an open order. And finally, please join us on YouTube. Search for the word TradeSpin. Click on subscribe, and we do have a live webinar every Wednesday morning and closing bell. Please join us, and also on Friday, strategy roundtable session, live sessions. So please join us for those times. And that's all I have for today. Thank you very much. All eyes on the Fed. Expect volatility in the next 2 weeks to continue on and market trading in the range for the next few months. Thank you very much and have a great day.